Welcome back to the Bitcoin Edge. In this episode, we hear from Checkmate as he is interviewed on What Bitcoin Did podcast. Checkmate is an on-chain analyst and founder of Check on Chain. He is an engaging guest and is even more forthright when he is being interviewed. For many Bitcoiners, the recent sideways and down movements of the Bitcoin price has been frustrating. After all, we hit an all-time high earlier this year, and now the price is approximately 20% below that price and continues to chop sideways. During these times, it is important to understand the past Bitcoin cycles and deduce what is likely to happen in this cycle. Past performance does not guarantee future results, but as they say, history often rhymes. It is my goal to bring you the best experts to help zoom out and remember the big picture. Bitcoin is a decentralized, sound, scarce money protocol that is the answer to our current inflationary fiat system that is slowly stealing our wealth. Please like and subscribe to help get the word out and grow this channel. In this interview, Checkmate explains why we are potentially going through a 4 to 6 month sideways chop and that all we need to do is just be patient. Let's have a listen, as the Brits say.
The best way to fight inflation is to add additional GST or VAT. Let's tax everything another 10% because that's going to stop people spending. It's like, yes, let's make everything more expensive because that's going to make it cheaper. Like you hear those kind of things. And the other one is Jeff Booth. It's not even a thesis. It's just fact that people will vote for more inflation to fix the inflation. And you start seeing these things that, Bitcoiners have been talking about for a long time. You're like, there it is. It's playing out in the real world.
There it fucking is. Well, this is why it makes me so fucking angry because the inflation has come from government spending, government borrowing, poor, reckless economic policy. Yet any attempt by anyone, especially if you're working class, to try and escape from that, they're not allowing you. Yeah. You can download on your phone endless gambling apps, and you can bet on who's going to win the next point in ping pong, £10,000. And then if you get blocked from that, you can download another one. So you can wreck yourself on gambling apps. But if you want to buy Bitcoin, you want to protect yourself, you want to save, no. No. And so then you start thinking, well, the fucking conspiracy theorists, they're right. They're trying to control us.
And then you try explaining any of these things to your friends. You're like, man, this guy's lost his mind. Yeah. It's like, no, I haven't. You guys aren't paying attention. It's just
this inflation thing. This is the government stealing from you because they're morons. But by the way, there was this guy. Nobody knows who he is. He's made this new money that's decentralized that you can have on your phone or a hardware wallet. There's only 21 million. Okay, it's censorship resistant, and that's going to fix everything. It's like you just sound like a fucking crazy person.
I say this all the time. No one can predict the future. Like anyone who tells you they know what the future is going to hold is kidding you. It's all about just understanding the mechanics. And I've been talking about this concept of like how do we characterize the Bitcoin market? And this is a little grid that I've been using. I mentioned before that Bitcoin is volatile in a bull, but it's also Bitcoin is a very unique profile. It's volatile during what I call the euphoric phase of the bull when we get above the all-time high and we're really rip-roaring to the upside. It's volatile during that period, but it's also volatile as you come off the back of it, right? So the end of the bull and the start of the bear are super, super volatile. But they're also, it's depending on whether the market is trending or going in a sideways pattern. And what we've seen recently is we're basically macro view in a very, very stable, stair-stepping, what I call quiet and trending market. It rallies, it goes sideways. It rallies, it goes sideways. On a macro scale, we've gone up and sideways, and that's it. And a lot of people kind of get swamped in the 1 hour chart and they zoom in a little bit too far and you kind of miss the big picture, which is that we have been going up and then sideways. And even with this sell-off today, we're still in that sideways range. So, and we haven't given back a 20% correction, which is, it's amazing. The fact that we haven't given back that much and people, it feels like a bear market bottom almost. That's how much fear is in the market.
I don't have any fear in the market, strangely. No. I don't know about you, Danny. This to me feels a bit like that kind of 8 to 12K choppy range pre-sale.
The question is this the top? It's always I've always got to go through the process of, is this the top? And the answer is like, you don't know, but we can certainly look at the mechanics of what creates a top. And we've had some indicators that have, blown off out the top and said, hey, it looks like, we could have had this enormous sell side and people looking at this at GBTC, is it clouding the data? Yeah, we had a lot of sell side. But at the same time, the market is chopping around in a 10K range for 3-4 months now. And the other thing I think people mistake is that we've been going up only for 18 months, right? From the FTX bottom all the way through to the 73K top. That takes a lot of energy out of the market. Markets have like this a fuel tank. And sure, on the weekly time frame and the daily time frame, we may want to chop around, but on the monthly scale, you can't go up for 18 months and not have like a 4, 5, 6 month sideways chop. Corrections, there is nothing like a drawdown and an actual correction to rejuice the market. That is what gives the market its energy back, because hodlers, our dollars go further. We can buy more sats the lower the price goes. There's an expectation. People expect the market to be at 100K. The market does not work like an ATM. It goes where it wants to go. And a lot of people try to like impose what they think should happen, and rather than just allowing what happens to happen. And I think that's a big turning point. Since FTX, we've only given back 20.4%. That's the biggest drawdown. And in 2016-17, it's like 30%, 40% is the norm. So people have kind of become desensitized to the fact that we're stair-stepping higher, which is extraordinarily strong price action. When the ETFs went live, I had so many comments coming in saying, you got all your on-chain metrics are busted, which I hear weekly. All your on-chain metrics are busted because it's all GBTC. So I went down the rabbit hole. I'm like, okay, well, let's actually measure this. How big are these ETFs? Because a lot of people will like, let's look at the ETFs. They're the only thing that matters. And they're extrapolating numbers and you're like, look, 100x multipliers and all this bollocks. So what I did is I went and looked at the on-chain world. So the orange and the blue are almost like in physics, equal and opposite forces. The orange is the amount of profit that was taken by investors. The blue is the amount of coins that were sold by long-term holders. These are people, and that includes GBTC. The red is GBTC. And the green are the inflows into the ETFs. So you can see that they are very, very small by comparison. They're about 20 to 30%, depending on when you want to measure it. So, 20, 30% is not small. That is a big component of the market. But I would be paying a little bit more attention to the 80%, which is the rest of the hodlers who sold into the rally, right? When the market was going higher, we as the hodlers, we sold our coins to the ETFs because for some people, 73K is life-changing. They've been around since 2013. This is their cycle. This is their station. They're getting off their 10% and they're changing their life.
This is
if
their
Bitcoin
house.
does another 10x run, that'll be people listening to that'll be you. You'll be this orange ball and this blue line. This is also a measurement of capital inflows. And you can see that where we currently are, that second wave just isn't as big, right? It's going to take a long time, on the order of months, for the market to digest what we went through over the last 18 months.
So that was James Check with his on-chain analysis for the next couple of months. Looking back on a macro scale, the market has gone up and sideways in a stair-stepping pattern, according to James. The key takeaway for me is that although the past does not predict the future, this cycle is similar to past cycles in that it can take several months after the halving before the Bitcoin price takes off. We are around 73 days after the halving, which is less than 3 months, and it could take 3 to 6 months or more of price chopping between 60 and 70K before the price breaks the all-time high. Patience is required while we wait. In times like these, I like to remember Bitcoin is a peer-to-peer protocol tied to energy. It's scarce, as there will only ever be 21 million coins, decentralized, and it's a hedge against inflation. So whether the price goes up or down in the long run, Bitcoin is hope for a better future. Like and subscribe to help me get the word out, and stay humble and stack sats.